So what's going on, guys? Here in front of me is the British pound and the New Zealand dollar. And quickly, if we check the weekly and draw some support and resistance lines, we are basically going back and forth here with a couple of breakouts and to the up and down side, but usually or in general we are going sideways, or we have been going sideways for the past couple of years. Now going down to the daily, we are here at the lower part of this support zone area, whatever. So here is a trend line that could go, or a channel that could be forming to go even lower, as we have seen here a couple of times, where we just went and broke past this support line here and hit this region. So this is my target, and if we quickly throw in just to check where we are. So here we are trading below the 200 EMA, and here we got rejected by 50, so we are seeing a bearish movement to the downside. Now checking the 4-hour chart, so here we are retesting the 200 EMA after this cross, which means we are on a bearish trend. And here if we quickly add in, let's take the CCI. So here we had this retest of the resistance line with a double top and double tap, which means we touched it twice. And here we have the bearish divergence, and ever since we had here our second or the first, like first to second, first retest and the second touch of this trend line, which means if we just quickly adjust this line and draw it a little bit smoother, something like this. So here we are pretty close to the second retest and the third touch, which means here the trade would be this. So long story short, here is the trade with the stop loss is slightly above this last high, or if you want to be a little bit safer, you can go this one, or if we hit this stop loss, you can enter a new trade and then put the stop loss up here. Now the take profit could be either the first support line. If you see a break, we go to the next or the previous low, and if we say bearish breakdown, we go lower to this trend line here of the channel. So this would be the trade on, well, on a bigger time frame, and kind of the simple way. So if we zoom in and check the smaller time frames a little bit and just quickly get rid of this here. So here again we are so here this is the stop loss, the previous high, and for now we are here going sideways as well. So the entry, since the momentum at the moment looks kind of bullish. This is why we always go from the higher time frame to the lowest for the entry, which means we could here now go to the 1 minute chart. So we could here retest one of these areas here or the next one, which would be here around this area. So which means now if we enter here and somewhere in within this zone and put our stop loss above this one, of course if we now break here, I would then wait for a clearer bearish sign, but this is the trade that looks kind of good here. So if we enter now, this would be this kind of trade, because at the moment this here could still be a triangle and we could see a breakout to either side, maybe with a kind of a retest, but in general I am bearish on the British pound, New Zealand dollar, since on the bigger time frames we are heading down. But at the same time, we could here be forming a bullish uptrend. So this is why we have here two trend lines fighting each other, because at the same time we could here suddenly see a turnaround and go higher or continue this move to the downside. But in general I prefer the downside, and so this is the trade on the bigger time frames. So it would be risk reward of 4.3 if you enter now. So this was the British pound, New Zealand dollar.